Hello, and welcome to today's Startup Equity Matters. It's a podcast about how to create real value from startup equity. It's for early stage founders and their teams. And remember, the enemy of startup equity matters is the old school. One of the least talked about topics, or at least the hardest topic really to find out anything about is exits. You know, what happens when things go really, really well. And as a founder or as a team member, you're able to create significant wealth from your stock. And it's sort of, if we can't champion these stories, it's hard to understand, what we're all striving for. So today we're going to dig into ESOP success and liquidity, how it works, what happens when you get a solid exit. How does this then drive you to create awesome ownership culture in your future companies, or not? Hopefully it does. So yeah, our guest today, we're very fortunate to have Stuart Cook currently from Twio Capital, and he's a board member and chairman of multiple high growth companies as well, including Fitstop, currently expanding over in the US. So look, this really is an exciting one. Met Stuart recently. He's done heaps of great stuff. I think he's had a career many of us, would dream of, scaling up companies, founding, exiting, traveling, investing, now having a family office. So super, super interesting and exciting guest. So welcome, Stuart.
Yeah, thanks very much for having me, and big fan of what you and your team are doing.
Yeah, thanks. I should also say, big supporters of cake. I think you could actually have the most cake uh, clients on here out of anyone. So super user at Twio as well. So we're very grateful for that. Not that this is a cake ad, but it's very nice. So thank you for that.
And
So
to be clear, that was we were big fans of cake before I got to meet you. So it's the product that speaks for itself. So really big fan of what you do.
thanks a lot. Really, really appreciate that. Look, again, very glad to have you here. Been looking for people to champion great success stories, and yours is an awesome one. So let's go right back to the beginning and let people get to know you a little bit. So how did things start out for you in your career?
So I won't go too much into the uni dropout three times. Ended up doing door-to-door sales because I was tricked into my first job thinking it was a marketing role.
That's so funny. I dropped out of uni and did door-to-door sales as well early on in my
Yeah,
career.
yeah, 100% commission, was dirt poor. Then joined corporate sales for a psychometrics assessment and HR consultancy company. But I was always somebody who was out there networking, was doing some charity work, and signing up for young programs or young professional programs just to expand my network and also do as well as I could in my sales role, by meeting other executives in companies, not being an executive myself, but just wanting to be around them so I could learn and grow. And I was fortunate enough to go and do some charity work as well as attend a program over in India, where I was fortunate enough to sit next to Sam Prince, founder of Zambera, on the bus on the way to the Taj Mahal. I thought it was kind of funny that a medical doctor had two Mexican restaurants, but then also but what really piqued my interest that he was using those profits to build schools and IT centers in Sri Lanka, where his parents were from. And
Wow.
so that following year, I signed up with him to go and do a month. I used all my annual leave for the year to sign up to go and build schools and IT centers with him in remote Sri Lanka, and didn't realize that there was a civil war going on at the time. It was the very end of it, but yeah, it was pretty confronting. But then through that process of working together, we became good mates, and then he said, "How about you come on board, be my CEO of my two restaurants, and I'll give you equity as you grow it over the coming years." And I wasn't particularly happy with the company I was working with and the role that I was there. And so I said, hell yes, and traveled down to Canberra. Luckily, I liked the food. That was, step number one. I'd already accepted role and quit my position, so it was no turning back. And yeah, the rest is history. It was an amazing journey for 6 years, 6.5 years, with with Sam and Zembro that took me not only to move to Canberra, but around the world and expand the company into multiple countries. And yeah, provided a really amazing opportunity for me from only a very young age, from 23 to 29.
No, mate, like to get those opportunities, I'm sure it sounds like you hustled hard. I think coming through a sales path is a tremendous path for an entrepreneur because you can really bypass a lot of those junior roles and get straight up into, the top end of an organization if you can prove yourself with great sales skill, great communication skill. Certainly I probably would have benefited from going straight from sales into a sales role in my career. I'd spent a long time as an accountant, which was very painful for me, but finally got back into into a more fun space. So look, I mean, it sounds like it was a lot of hustle and also a bit of serendipity and a bit of luck, with that international meeting. But I suppose, did it feel like you were taking a big risk and being very brave at the time? It sounds like there was a lot going on there. You've got international travel, international volunteering, coming back, moving to another city. It sounds like there was a tremendous amount going on.
Yeah, and I think like I looked at, and the way I've lived my life is that what's the worst case scenario being X, and if I'm okay with X, then that's fine. And so I looked at it when I jumped on that journey with Sam to go, hey, worst case scenario, this doesn't work out. I go back home, live with my parents, and finish my degree. And that's the worst thing that can happen compared to many children around the world who are hungry, who don't have education, don't have, safety or protection. Then that's a pretty good worst case scenario. And as I've lived my life, my worst case scenario keeps on getting better and better and better. And so I definitely think, though, that there was a huge amount of things that we did that made us successful, but there was also a bit of luck. Sam Prince could have been running a sock factory and I probably would have signed up. There definitely was the right time to be entering the Mexican wave that was happening. I didn't know that was happening. So from that point of view, it was very fortuitous that I got to join right at that beginning. But then on the other hand, I slept on his couch for the first few months. I spent 6 months sleeping in our office. I've slept on work sites. I delivered sources because the transportation was too much in the beginning. So it was that grit, determination, and also surrounding ourselves with people who had been there, done that. Because that was the thing that we got to learn, because we'd been set the task of opening up 100 locations over 6 years, over 5 years, and it sort of took us 6.5 from when I joined. But we knew that in order to achieve that with no external funding, no debt, we needed to surround ourselves with the people who had done it before so we could learn from their mistakes and their successes, so we wouldn't make those same mistakes as we were growing because of our growth ambitions. So, we used youth very much on our side as part of a negotiation technique to get, a lot of free help along the way in terms of, taking out founders for coffees. And, we'd sit there and speak to somebody in their 40s or 50s and say, hey, if you were 24 again and starting out again in business, what piece of advice would you give us? And so you could see them look at you and go, whoa, I was definitely not doing what you guys were doing at 24, 25. And so people were very, very generous with their time. And I think that that's something that was incredibly appreciated and one of the main reasons for our success along the way. But it's one of the main reasons why we give back today is because of all the generosity that we received as early stage founders as well, or executives.
Wow, yeah, so cool. I mean, I'm hearing there like a wonderful philosophy and perspective on life in general. Like, we're so fortunate, and many of us, especially in, Western countries, and, we have so much to be grateful for. And so that can, if you have the right perspective, give you the ability to take risks. And in that young period when your career is very early and you've always got the fallback of studying and having a more traditional career, which many people would see as a great outcome anyway, perhaps take that opportunity to take those risks and back yourself. I think, that's a wonderful message for everyone, and great to see that it worked out for you, even if there was a bit of luck in there. And I'm sure it always takes a bit. So let's say it was half your amazing ability and half luck, or thereabouts. No, we'll give you more. We'll give you more.
I'm happy 50-50. That's fine.
Okay.
It's also, again, it's luck around your first franchisees and your business deals and things like that as well going away. But yeah, it was an amazing opportunity. I'm very grateful that Sam saw something in me, and we really built that company together for those 6 years there.
Really love his view as well. Let's talk a little bit about your equity. You don't have to give any numbers that you don't want to give, but how wonderful that he saw that equity is not so commonly shared in Australia. Going back quite a few years as well, it wasn't that common, and it's quite common now in the startup space, but I think still it's not super common in traditional businesses. Maybe talk us through a little bit how that came about. Did you negotiate? Was it like in balance of salary, or how did it all come about that there was a significant equity component to your role?
Yeah, and it's interesting, right? Because I didn't know much about equity or ESOP or anything back then, and so I mean, it was a very easy negotiation. Hey, come on board, be the CEO of my company, and I'll give you upside in the business. And there were certain milestones, so it wasn't a time-based ESOP in a way. It was actually milestone-based. I was the only person who received equity in Zambrero. It wasn't something that was extended to any of the executive team as we grow, and that was a decision made by Sam. And
was it a massive incentive for you? That must have been a huge incentive at that age to dig deep. You're like, wow, look at this opportunity I've got. I'm just going to go ballistic and make sure I make the most of it. Was that part of your thinking?
100%. And again, my goal before meeting Sam was to one day be the VP of sales in corporate. And so, because I didn't really know what it was like to be an entrepreneur or start your own company. My parents are school teachers, and so I wasn't really ever exposed to that entrepreneurial world. My brother and sister are school teachers now.
Wow,
and
cool.
Amazing parents, super supportive, but not very aware of that business world. And so when I was given a chance to own something myself, and now if I look back and go, hey, it also was the ability to not pay me very much at all. I was, 40 grand as a contractor, paid for my own car, fuel, all that sort of stuff. But again, it was a great tool to be able to get me incentivized me incredibly to work incredibly hard and make it a huge success.
And such a win-win, was it Sam? He got like an incredibly hardworking, high-performing, youngster, like just hungry as hell. And, he's obviously given away part of his company, but he's only really given away a much bigger company that you've helped to build. So it's just such a tremendous win-win. So, let's talk a little bit about, that success period and how it all came about that you ended up getting a fantastic liquidity event, and congratulations on that. It's a wonderful achievement.
Thank you. And so where it got to is I was definitely a minority shareholder of the business, and Sam, while I was CEO, also finished his medical degree, his residency, and then as a serial entrepreneur, he was coming up with different ideas, and Zambrero was definitely the cash cow that was providing the facilitation to be able to go and set up the other businesses. There was there was one disease charity, there was life letters, there was Medico, all of those sort of were able to be realized because of the Zambrero world. I was getting ready to take the company into the US, was going to lined up outside capital for the first time ever since the beginning, and it was ready, and it was decided that was going to be the case. But then last minute, it was decided to actually not go ahead with that as the plan of attack, and Sam was going to really focus on the biotech business, and so which he was well within his rights to do that. And so I'd already put in place the general manager turned CEO, Karim, into the business to replace me here in Australia. And then, so I said, and I'd hired my international COO, head of network development.
Oh,
and
wow.
So we were ready. We were about to get married, my wife and I, and then we were planning to move to Seattle. And then, so the strategy did change. And then, so I said at that time, I said, look, I'm not part of the biotech company. I know nothing about that. if you do want to, it's well within your rights to be able to focus on that. But how about you buy me out, because I don't want to be undercapitalized to go into the US and make it a big splash. And so I then got Sam to buy me out over the following 2 years. We did a 2-year deal. And I put forward a buyout figure that I thought was fair, that could also be paid out over multiple years in order to not impact Zambro from a cash flow standpoint.
Yeah, amazing. How many restaurants were there at that point?
So we're just coming up to the 100 mark.
Wow. Yeah. So unbelievable. And, to be able to get bought out from kind of free cash flow over a reasonable time frame, such a smart move as well, because again, it's kind of win-win. And I think most great success stories in business that's what you're able to find. You get the timing right, you've got the right people, and you're just looking for a fair deal, that fits within the business model and the cash flow and where things are at. And so again, congrats. That's a huge outcome. Let's move on a little bit. We've got a bunch of cool businesses that I want to run through. I'm sure people want to hear about. So I've heard about the Entourage for years now, toyed with joining many times. I probably would be a member by now if we hadn't done a couple of other really awesome accelerators. And we're very much a high growth SaaS company, which, perhaps isn't the exact type of company Entourage works with. Anyway, long intro, but great business. You were there 11 years, shareholder, founder, board member. Tell us a bit about all that.
Yeah. So, the founder's Jack Delosa, good friend. And I happened to be sharing an office with Entourage when it was only Jack and Bryce.
Right.
And so, they had, I think it was the second unconvention that they were running, and Jack said, "Oh, how about you come along to it?" And so I went to it, and it was an amazing event. There was, hundreds of people who were all doing the same thing that we were doing, startups or wanting to be in startups. And so really found that community that I'd never been exposed to before. And I ran up to Jack after that day and said to him, "Hey, this is amazing." And he goes, "You should come to the 2-day event we're running next week." And it was $1,000, and I couldn't afford $1,000. Even though we were one of the fastest growing franchises. I think we were number 2 or 3 on the list. I was still dirt poor.
This is still during Zambrero, before you had your buyout.
Still within Zambrero, really early on. Maybe 6 to 10 locations we were at. But we were getting already a bit of fanfare in the media with Zambrero and our rapid growth and how young we were. And so he goes, "Oh, no, don't worry, you come along to the weekend." And so I then came. By morning tea time, I said, "This is amazing. How do I be a part of that?" And he goes, "Well, you know how to systemize and operationalize restaurants and scale a company. How about you present tomorrow?" And so the next day I presented for 2 hours on operations. The Entourage was still a scrappy startup at that time.
I love it when two entrepreneurs get together. It's not like, "Oh no, sorry, you can't go." He's thinking, "Oh, hang on a sec. I can get some content out of this." And you're like, "Hang on a sec, I can get a free ticket out of this." And then bam.
100%. And so, and then off the back of that, I did a bit of mentoring as well for some extra cash on the side for some of the Entourage members. And then there was a chance for Jack to purchase his old company that he was a smaller shareholder in, MBE Education.
Yep.
And so he looked to raise some capital. So myself and Dominic Carosa were the first money in, because Jack had owned it 100% up until that point. And so, very fortunate enough to be able to go and invest and be I'd say like sort of a seed investor to help with that acquisition with Dominic Carosa. And that was in, 2011, it was probably 2011, 2010. And then just to be there, I was on the board for 10 years. It was inspirational to watch Jack and the team grow and, bring on some other amazing executives and just be around a community, because I hope that one day I'd exit Zambro, have some cash. And I figured that entrepreneurs who are willing to invest in their own education by joining the Entourage would be the type of entrepreneurs that would leave their ego at the door and be great investee companies to be. Because if they're willing to learn from others, then it means that they're willing to learn from their investors. And so, throughout the last 10 years, I've probably invested in least half a dozen companies that have gone through the Entourage programs, and met some amazing people and lifelong friends.
Oh, amazing. No, it's I didn't realize that was all happening at the same time, the Sombrero and the Entourage businesses, but I guess it kind of makes sense now that you say that. And what an awesome time a lot of that must have been. And so let's sort of, I guess, go now post Sombrero. Talk us through, I guess, some of the the opportunities and emotions and like what your new life looked like after I guess having such a successful period and being able to have a bit of an exit.
Yeah, so it definitely at the time of exit, it was a bit of a shock to the system because it wasn't necessarily the plan that we'd prepared ourselves mentally for. We were getting ready to go to Seattle, but then there was a bit of a shift in strategy, and so definitely went through a little bit of an identity crisis.
Yeah, because you were on a big upswing with a big expansion plan and a lot of things lined up, and so yeah, that would have created a bit of turmoil for sure.
But then we also then saw it as an amazing opportunity my wife had been Sam Prince's CEO of the charity One Disease at a Time. So we were the two CEOs of Sam Prince, fell in love, got married.
No way.
Yeah. And by the way, her name is also Sam or Samantha. So it was incredibly confusing. But yeah, so Samantha had just stepped down from CEO of One Disease at a Time, which is looking after neglected diseases in remote Indigenous communities. So we've both been startup CEOs for 6 years, her 4 or 5 years, and so we just needed a break. So we got married, and then we did a 1-year honeymoon around the world, which was unbelievable and a huge chance to just sort of experience all the world has to offer. And after making a little bit of money as well, we got to have an amazing time.
Didn't have to backpack like the rest of us. I don't know what my daily budget was when I did my trip around Europe, but it wasn't. It was lower than the minimum wage. But I hope you did it a bit better. Where'd you focus? Europe, Asia. What was the big areas that you did?
We went North America, South America, and then Europe. And sort of spending 3 to 4 months in each. I think we went to 20 plus countries. Probably was slightly aggressive on the schedule. But again, a year sounds like a very long time, and it is, but you don't get to see all of the places that you want to do. But we put on a big on a wall all of the world's coolest events to go to and which continent they were in approximately each time. So we went to Rio Carnival, we hiked Machu Picchu, we went to we went to the opening night in LA of Star Wars. And so we just did some really cool, interesting things. And it was an unbelievable experience. And so one that was in a way a big celebration for ourselves for working so hard and being successful in our roles.
Amazing. I'll have to swap stories with you at some point. My first thought was Machu Picchu when you said you did South America. It's really a life-changing thing to do and recommend it to everyone out there. But I'm sure we would have done a lot of similar things, all around the world. So I look forward to catching up over a beer one time.
Yeah.
So then looking through and, from our chat, I don't know, when was it? A couple of months ago now, you also had a travel startup. I'd love to learn a little bit more about that. You founded and exited a travel business as well since Sombrero, right?
Yeah, so I'd always wanted to go and work in the States. And so on our honeymoon, we met some founders who had a company called Sendstay. They were a vacation rental management company. And so with the rise of Airbnb, there was a lot of companies who were making money off the arbitrage that exists between long-term rentals and short-term revenues.
Yep.
And so they were taking out leases, furnishing, and then they were incredible with revenue management, almost treating the Airbnbs like hotels, understanding dynamic pricing, and sort of being a step above all of the other hosts on Airbnb. And so I had met them at a party in LA at the beginning of my honeymoon. And then was the middle of the honeymoon. One of my old interns from Boston University, who I'd stayed in contact with, Paul Luget, joined us for our Colombia part of the trip. And it was just happened to be that we're staying in an Airbnb in Colombia, and we had an issue with the plumbing or something. And we had a manager who spoke really good English. And so we took him out for coffee after he said that he managed 10 places. And so, cut a long story short, I ended up contacting those people back in LA. They said they just fired their CEO. After 3 months of back and forth of different things, they said, hey, you should come and run this. So I then moved to LA and then San Diego, ran a company over there. That didn't end up working out, but Paul and I spun off a part of that entity, which was a similar style business. And so that's where Native Travel came from, which was a vacation rental management company. And so that was in Coachella Valley, San Diego, and Big Bear Lake. So we sort of had ski, surf, and sun as a bit of an area. But Paul is somebody who I saw back in Zambro days as an intern for me from Boston University. He stayed on for his summer break as a paid employee of Zambro. We'd kept in contact. And then, we were the primary funding source for that business after exiting Zambro. And, we loved Paul. And so he put in a little bit of money. We put in the majority of the money, but then he came on as CEO, and we set some additional targets for him to earn a greater equity position in the business as well. And so, again, using those incentives and ESOPs to not only get the right people to balance the deals based off the work and the amount of capital that's contributed is something that we use all the time in any of our investments. And also, talking about Twio today, all of our clients, one of the biggest things we recommend is the use of ESOP and putting incentives in the right place in order to drive the right behavior.
No, I love it. It must have been wonderful to be able to fund your own venture, and every venture requires different amount of capital, but still to not have to go immediately out for external capital to be able to put something together must give you a lot more speed and confidence and flexibility to be able to go after an opportunity when you see it. And then, as you say, to have that experience on how to incentivize someone with equity and have them come on the journey with you. Just so great to see it in practice. Or what I keep talking about, like year after year. It's just so cool to see.
And I think that the really big, probably a good thing that people can take away from the Native Travel piece is that is a business that was renting out or managing other people's properties in vacation rentals. When COVID hit, we nearly got wiped out. So we were down to 2 weeks worth of cash. I'd been hit in a number of different things. We were exposed in hospitality, gyms, tourism, like a lot of sectors that nearly went to zero. Like it was actually illegal for us to host people when COVID hit. Yeah. And so we're down to 2 weeks worth of cash. We were looking at liquidating the company, selling contracts. We were scrambling, and I was back in Sydney at this time. And so that was an incredibly stressful situation. We were fortunate enough to get one of those COVID loans in the US and got that fast tracked. It gave us enough cash to stay alive. Wow. But then fast forward into 2022, we were able to exit that company. And so that is one, we exited for 7 figures, not 8, but it was a decision that we had to make in order to go, hey, like, what does the landscape look like? Yes, we could grow this bigger, but there are other giant competitors coming into the market. We don't like the legislative concerns around Airbnb and local jurisdictions changing their minds every 5 minutes. And so we actually were acquired by a very large company that was getting ready to IPO as well. And so we believe that although we didn't sell for that giant exit that we thought we could, we believe that we got a very, very good price. And if we're looking at the distributions and where the business was going to be, it was going to take a really long time to get that compared to the security of the money off the table right now. Yep. And that was the decision that we made as an ownership group.
Oh, I love it. Again, who knows what the right decision is, but, making strong decisions having, taking into account like all those factors and not just blindly growing a company forever. Like I think a lot of people are like, I must scale my company to $1 billion, and that might be the right path, but it might not be. And having the ability to think strategically and put something together and get an exit. I haven't done it myself yet. Something I'm looking forward to doing at some point along the journey. But I mean, how did it all come together? Did you have to go out and find buyers? Did you have like a broker? What was let's help people understand a little bit about what an exit kind of looks like, at least from your experience here.
Yeah, for this one, we were fortunate enough that to go to the CEO went to quite a number of he was very connected in that sector in terms of going to some of the forums or to the conferences, and to get to understand the interactions. And because the US is such a big market, there's a few brokers who just specialize in selling vacation rental management companies.
Yeah, wow.
And so, compared to I don't think that that's the case in Australia. I'm sure there's some people that as one of their specialties, but
US is so big, you can turn over like 500 million just repairing like washing machines and laundromats or whatever. Like it's crazy over there.
And so that was the piece that we approached this gentleman who had a couple of people in his firm, and he actually said, I'm happy to act for a buyer, or I'm happy to act for the seller. And so for this case is that we wanted to, even though we ended up ultimately going to somebody who we already knew was a potential buyer and we put forward for the very beginning, is that he was actually really good at helping structure the deals to know what else was going in the market, and I think help us get a better price than we would have got ourselves. And understanding how to structure those deals, especially because we were looking at forward-looking contracts and there was some nuances around it. So I'm going through that process really made me value and appreciate how a broker or somebody who's really experienced in M&A and transactions can add. So I think you can think about it as, I think we paid him 5% of transaction value, but compared to what we would have got, it was, it's probably worth 10x what we paid him. So
yeah, again, win-win. Like without him, you wouldn't have had all that research and all that intel, and then you wouldn't have had the confidence. I can only compare it to last time I bought a house. I spent so much time doing research, and when I found the one I wanted, I knew exactly. I went straight in. I knew exactly what I wanted to pay. But if I hadn't done all the research, I could never have done that. And so I think it's important to have these professionals around to help you with these things. If you've never done it before, I think you'd just be floundering and lost, and you could easily do a way suckier deal or never get one done at all. And then, who knows if the timing is going to be right the following year. Or did it take long? Like what sort of time frame are you talking? I guess
it would have been say 2 to 3. It might have been 2 months to get the buyer. We ran a pretty aggressive buying schedule. We then had maybe a 60 to a 90-day close for their DD to go forward. But then we also did have a retention payment on 25% of the sale price for a 6-month period. Because we're transitioning clients from us to them. We kept on some of our team to help with that transition process and then get a final balloon payment at the end.
De-risk it a bit and balance, I guess, out the... I guess they were just trying to protect themselves in case there was too much IP connected to you guys or something like that. Cool. Yeah. Awesome. Thanks for talking through that. Again, congrats. Sounds awesome. And another step on your journey to creating your family office. Where along the way did Twayo Capital sort of come into the world? And, that's your family office, I think, to some degree, and a CFO services company. I don't know exactly how you position it. Maybe share a little bit about, the genesis of Twayo and how that's going. It certainly seems like a super interesting business from my perspective.
And so Twayo as the original entity, it was actually when I first invested in the Entourage, because I looked on the register and I saw that people had different names. It wasn't just like the Delosa family office or the Cook family office or Cook Investments Pty Limited. They had all these different names. I'm like, oh shit, I better come up with a cool name. And so that's where I came from, up with Twayo, which is the world is your oyster. because a lot of people have been saying that to me. And it then turned actually into a logo and a brand when Samantha and I were traveling around the world, because we knew that we were going to meet amazing people on a honeymoon. And so we created a quick website, quick business cards, so that when we met all these cool people around the world, there was a way to connect with them. And so, but then it wasn't as a business. So it was really just managing our investments to begin with. But then as a business, that's really just come into light in 2019, where I reconnected with Ryan Barnes, who was the CFO of Zambrero while I was there, and then also was the CFO of Sam Pritchard's family group. He and I had stayed in touch, but we hadn't worked together in 4 or 5 years. And it was after investing in Fitstop and becoming the chairman of Fitstop, I realized that it was hard to be a good chairman and advisor to a company that didn't have strong financials and forecasts. And so he then did some work after hours to be their virtual CFO. I said, hey, let's do more of this together. We like working together. I need what you need. And so I need all the amazing stuff that you do. And so we actually formed together to create a new entity, which was Twio Capital and Advisory, lending from the original namesake. And then so Ryan and I became partners, founded Twio Capital and Advisory, and that now is a full-fledged corporate advisor and virtual CFO advisory firm. And then also managing the portfolio of investments pre that formation and post that formation as well.
Amazing. So I guess there's two arms to that. There's the investment side of things, and I see from your LinkedIn that you've got a bunch of board positions and you're involved in a range of awesome companies. So, and then on the CFO side of things, do you want to talk us through a little bit of detail on what services are being offered? I think it's a good opportunity to share. From my perspective, I totally agree. We see so many startups, they come in with engineering, product background, marketing background, they're after, $1 or $2 million or more. And, it's hard, you can't afford a full-time CFO, but if you haven't got anyone skillful in finance, you can very easily waste that money. Or even if you're not wasting it, you can't communicate what you're doing with it well. And therefore you lose the trust of your investors. So as a former CFO myself, I'm 100% across the benefits, but maybe talk us through, some of the specifics of the types of work that you're doing.
Yeah, cool. So I think people come into our lives for a season, a reason, or a lifetime, and we're definitely a season. So we work particularly with companies, say $1 million to $10 million, maybe growing up to $20 million, but we're there for that part of the journey. We're not accountants, we're not bookkeepers, and every company will start off with that. But then when they need to start doing budgeting and forecasting because they get to the end of the quarter and go, oh, shit, the BAS is due and I don't have enough cash to pay it because the bank at the ATO, they've been leveraging themselves. So that's really that tipping point of like that $1 to $3 million in revenue is typically where we see it, where we come in, we will help build forecasts, board reports, help show the CEO and the founders and definitely the board what the risk profile of the business is, what are some of the areas that they can improve to either increase profit margins or decrease their risk or decrease costs. So because we've got nearly 30 companies that we do this as a service to, we get to learn from all the other different companies we're working with and provide them the right opportunities or savings as well throughout that network. And then when they get to the point where they've outgrown us, I think on average our companies that we work with grew about 50% last year. And at that rate, they outgrow us at a certain point, and we'll tap them on the shoulder and say, hey, it's time for you to hire a full-time CFO or financial controller, and we'll see you later, and you're a success story. So we're there to help them in that growth journey. We've got some clients who are really stable family-owned companies that will be with us maybe forever, but we're really there, and we seem just probably from our own networks to attract those sort of early stage high growth companies, or ones that have got a lot of aspiration for growth.
Yeah, perfect. And you were talking about, I guess, being an advocate for having ESOP and stock options. How does that work from your perspective? What sort of advice and tips do you give your clients around ESOPs and stock?
Yeah, so we will always sit down and go, what do the owners and the founders want for the company, and what are the skill sets they need around them? And I think it always comes back to that, because we are there to represent the company and the owners and the founders of the company. And so all we do is we're not lawyers, but we act as those advisors to let them know, hey, here are some of the things that we've seen work really, really well in the past. You know, we can help identify, hey, you seem to really rely on that person. Have you ever thought of actually giving them equity or giving them upside? Sometimes it might not be ESOP. Sometimes it might be phantom shares. Sometimes it might be other performance pieces. And so we sort of just go, hey, here's all the different tools that you could potentially use. We strongly recommend ESOP. But then often it's also just helping explain ESOP to realize that you're not giving away the company, that there are sort of different tools and protection mechanisms in place to be able to get that back if it doesn't work out. And so I think that's a big piece. It's just a lot around education. And that's what we do, is like really educate people around those different tools so they can better be informed to create those right incentives to create the right behavior from their team members, especially the crucial ones.
Yeah, sounds like you're coming at it from the right perspective. I think a lot of startups, they'll chuck an ESOP in place because they kind of have to. They'll go to their lawyer, they'll get the thing, and everyone will give it a stock, but they're not doing it for the right reason, not doing it to incentivize the team and create behaviors and create culture. And so then they end up, 5, 10, 15% of the company kind of goes out the door to the team. And look, there may be an exit, and that's awesome, but you're not doing it to incentivize the team in that instance. And that's, I think, kind of doing it upside down. So, I think you're absolutely right. What's the problem? What's the motivation? What challenge are we trying to, to build here? And where are we trying to go? And then what are the tools, that we can utilize?
And also to make the team actually realize what they've got as well. Because a lot of people I've seen, they get an ESOP and they don't really understand what it means as well. And so it doesn't actually act as the appropriate motivator for them if they don't understand how it's going to work out. So that's not educating the entrepreneur or the CEO, it's educating the team members as well.
There's two levels, isn't there? Yeah. Some of them, they even think it's bad. Hey, I've got this ESOP, and they think, oh, it's being deducted from my pay, or I've got like a tax bot problem, but there isn't. And like, it can really be negative when it's supposed to be positive. And, so it is a bit of a process to go through to get it right. May I ask how Cake helps in this? This isn't a Cake podcast per se, of course, but let's talk a little bit about how you see, Cake helping from the cap table perspective, capital raising, ESOP, like whatever you sort of feel like touching on.
Yeah, so we use Cake with every single one of our clients, even if they haven't asked us to. Because and I am going to sound like a sales pitch, but I promise I don't have any share. Cake,
checks in the mail.
Yeah, and especially because you offer that freemium. Oh, I think it's, and I could get a little bit wrong, correct me, but pretty sure under a certain size is a free Cake piece available, and then it's once they get it over certain sizes. So even if they're a single shareholder, it's just this great place to keep everything in one source of truth. And so when you get new shareholders, that's great to have the register, and then either communicate to your shareholders through that platform. They can access their share certificates and do all that, rather than to keep on harassing the CEO or the accountant or the CFO. And then when it comes to ESOP, it's that you can load everything in there. And then what's cool is when you've got the different vesting periods, is that there's depending on how often the vesting happens, they get this little email that pops up and goes, congratulations, more shares vested. And so that sort of reinforces that the company's doing the right thing for the team members, especially when it comes to ESOP. And there's some really good sort of how-to guides and explanation videos and things in there as well. But yeah, so we use it for every single one of our clients.
Awesome. No, great to hear. Again, that's totally Stuart's opinion.
Yeah, well paid for this.
I do apologize for having a little Cake plug in there, but I know Stuart and his team are super users, so I thought it was worth checking out. All right, we're running out of time. But it's been awesome. I've got a couple of things that I want to finish on. First of all, Stuart, I really liked how, throughout, this interview, multiple times, I guess we've talked about your generosity and donating, both yourself and Sam. And I was just looking at your LinkedIn at For Purpose Co. And so I'd love to just dig into that a little bit and hear what that is and what you're doing there.
So For Purpose Co. is the venture arm of OzHarvest. So OzHarvest is an amazing food recycle charity started by Ronnie Khan, and has been around for over a decade and done some amazing work, because food waste is a huge problem in Australia and around the world. And so OzHarvest's goal is to be able to create a more efficient food system, and any of the wasted food is to be able to go and be redistributed before it gets wasted. And so the challenge is a lot of charities are finding it harder and harder to raise funds from donors. There is a thing called donor fatigue, and everybody gets hit up all the time for money, and there is more causes out there than there is funds available. And so OzHarvest has set up a new entity a few years ago called For Purpose Co. It's about to get rebranded to OzHarvest Ventures. But our goal is to be able to invest in and work with early stage companies in the food recycle and the entire food sustainability ecosystem, get free carry, leverage the networks, the donors that OzHarvest has, which would be really, really helpful for early stage startups. And then to be able to generate wealth for OzHarvest Ventures to eventually fund OzHarvest, or to allow it to continue to do the great work it does.
I absolutely love that. And I also love hearing there's a great intersection there between doing good and commercial outcomes. I was just in LA last week at UCLA for a climate tech event, and there was strong trend at that event from the panel around waste and minimizing and reusing waste. It's going to have to increase 1,000-fold, I think, over the next few decades. And so not only are you going to be doing good, hopefully there can be some good commercial outcomes, which then creates more opportunity for reinvestment, with good people. So look, I love hearing good people do well, and it's been an awesome subcurrent to this conversation. So good on ya. It's good to be a good person first and then a good business person second. So just to wrap up, we have a section quite often around creative, healthy lifestyle. That's what we call it at Cake. We see our health and our team's health and mental health as a very important aspect of building a great company, having, really strong, capable team and a successful company. Can you touch a little bit on, how you see health and mental health for you and or, in your businesses and how you look to promote that?
Yeah, so definitely am for that. And I know that in times of high stress, I let that slip, and that's one of the first things I let slip. But when I let it slip, then I don't perform as well. And so, one of the things that I think has been incredible that Ryan Barnes, who runs Twio, has done is we've created a really big health and wellness program within Twio's framework. And so we have even as simple as it's called Feats of Strength. It's a Slack channel. Everybody at the start of the week writes down how many active things they're going to do this week, and everybody posts, going out for a walk or doing something. They post how many times they do something from a health standpoint, and then also have to do at least one wellness thing. And it could be going and buying your favorite cake and enjoying it in a park. It can be going and visiting your parents, or it can be going to a sauna and having alone time and meditating. But just that celebration of doing positive things for yourself and not just work within the work environment is, being received incredibly well, and the team are incredibly well engaged with it. And so that's something that we've seen a direct output of better performance, and just happier, healthier people makes a better environment within the business. And so that's been probably the biggest thing. And also providing them with a service, and I can't remember the name of it, but we provide it free to our team, but we pay for a subscription where they can call counselors if they want. If they're having a hard time at home or at work or anything like that, that's always there available. It's completely anonymous. We only know the hours that get used. We don't know who used it or what it was about, but you can see that there's been some months that people use it a lot, some months nobody ever uses it, but that's something that the feedback's been really, really strong on that, and that's around that mental health piece as well.
Amazing. Thanks for sharing. Particularly resonated with me, your wellness program, how broad it is and how open it is. And it's not all about discipline and optimizing and doing more. You know, we need to have balance in our wellness routine, and we need to understand ourselves and what keeps us in a good position. And we need to be very broad in our understanding what wellness is within a team, because we're all different. And, you know, we've definitely had learnings along those lines at Cake as well. So thanks for sharing. Look, Stuart, thank you. I am going to have to wrap it up just on time, but I think it's been awesome, interesting, enlightening. You know, for anyone that's looking to understand, you know, what does it look like creating real value from equity, and what opportunities does it open for us, and how does it help a leader learn, you know, to go on and create better and better businesses throughout their careers. I think we've done plenty of that. So thanks for joining us. We're very grateful to have you. And I guess that's the end of the episode for today.
Cool. Thanks for having me. Really appreciate it.